This stupid simple scalping strategy gives me days like this and this. In today's video, I'm going to show you exactly how. And don't worry, because it's so simple that even a complete beginner couldn't mess this up. So let's break down the strategy step by step, and I'm going to show you my 3 rules to find, enter, and exit these trades. And at the end of this video, I'm even going to show you a 1-month back test to prove that it really works. Not to mention that my biggest trading day this year was over $45,000, and it's all thanks to this one strategy. So let's get into it. So the first thing that you're going to do, no matter what broker you're on, is you're going to head over to your indicators, okay? And you're going to look up under indicators MACD. Okay, so you're going to pull up the MACD, and I'm going to leave all of the settings as default. So I'm actually not going to change anything. We're going to hit OK and hit apply. Now, MACD stands for Moving Average Convergence Divergence. So essentially, the MACD measures the moving averages, and it is going to visually show us where we can enter and exit on a chart. So what we're going to do specifically is we're going to pull up any stock, okay? And we're going to look for charts that right before market open show the MACD crossing, okay? So the MACD is either going to cross, and you can see here on my chart, over to the downside or under to the upside, okay? So we're going to see that when the MACD crosses over to the downside and it flips to red, that would let us know, and that gives us indication that we can get in a short position. Whereas on the other hand, if the MACD crosses back over to the upside and turns green, that lets us know that we can get in a long position. Now, you can use the MACD on a 15-minute, 5-minute, or 1-minute time frame. If you're scalping, typically we're going to be on a 1 or a 5-minute. Now, keep in mind that the shorter the time frame, the more false signals there will be. Now, here's a great example on Apple. The first step out of my 3-step checklist is to look at the pre-market session. So I'm going to try to identify 5 to 10 stocks that during pre-market are getting ready and preparing to, or have already crossed. So you can see here on Apple how the MACD right before the open made a cross to the upside. Okay, you can see that right here. And look what happened off of the open. Apple pushed up and moved nearly 2% to the upside. So let's say we've identified Apple during pre-market. We could see right before the open here, we got the cross. As soon as the market opens and I trade options, I would enter calls, okay? And then it becomes a question of, well, how do we actually know when to get out of that trade? Well, that's a good question. And all we have to do is just look for the next cross, which was here. So you're not always going to time the top perfectly if you're long, or time the bottom perfectly if you're short. But our goal is to capitalize on as much of that move as we possibly can. So this position would have been a long. We would have entered off of the open. We would have traded the move. Obviously, we would have at one point been sitting up here at 280. We would have come down a little bit, moved back up. And at this point, this was our signal where we crossed and where we started seeing the MACD die out. This was our signal to exit, okay? So we can tell the momentum at which that stock is moving because these bars are going to measure that. They're going to measure the difference between our 2 moving averages, okay? So as our moving averages diverge, as they get further and further apart, that means the stock is trending, and it's trending faster. And in this case, if it's green, it's trending faster to the upside. Now, when things start to die out, as we started losing steam here after that high, you can see how we started seeing smaller bars forming, giving us an idea that that move is fading out. Now, we could have sold here, right? But we didn't see a MACD cross yet, and we didn't even flip to red. And so actually by waiting for our first red and waiting for that cross, we would have been able to capitalize on a bit more. So the trade would have been entry to exit, and we would have closed here. Now, I know we're looking back at historicals, which means we're looking in the past. We're not trading this live. But one thing that I do every single morning, I'm live trading over inside my mentorship. And I've been doing this for the last 4+ years, working with my students, teaching them how to trade. They're not able to only watch me trade live, but every time I enter, I send out a message with my entry, and every time I exit, I send out a message with my exit. So it also gives my students the ability to not just learn, but also follow along and copy myself if they so desire. Now, if you're interested, I will put a link in the description below to my mentorship. You can head over there and learn more. So let's look for another example. What you can do is go to the S&P 500, NASDAQ, Russell, any of the major ETFs, and break down one by one each individual stock in that ETF. So let's look at Microsoft, another one of our big names here. And again, we can switch over to a 1-minute time frame, and that will increase our trade frequency. We'll be taking more trades on a 1 minute. And again, there will be more false signals at that point as well. So look at this. Microsoft heading into the open was rallying. We were pushing up. Off of the open, we started selling off. You could see MACD crossed here. We started dying out. We started seeing red. We converged, which means we came together, and then we started coming apart. And so this would have been our entry, okay, our entry on shorts. So at that point, we go ahead, we buy our puts, and we trade the move down to just about that low. Okay, it's again going to be hard to time an exact low or an exact high if we're short in this instance. Timing this low and looking at our cross, we would have exited around here. But that is still a very substantial move that we would have caught. So you can actually try to time the entry or the exit a bit earlier, as again, we'll start to see things slow down. We'll see that downwards momentum in this case start to slow down as those bars get smaller. And we could see how we go from pretty wide apart and then they start to come together, they start to converge, and then we get the cross here. And at this point, the buyers have taken over and they're pushing this thing back up. So let's go ahead and let's lock in profit on that short. So my 3-step checklist is 1, find a stock, preferably during pre-market, that either has a MACD cross above or below. And then we'll trade that corresponding move either long or short as soon as the market opens. Now, you can actually trade this all day, but I find that trading off the open the first 30 minutes, we're typically going to have a lot of success. We're going to get a really strong downwards or upwards move, and then a clear cross followed when that pattern breaks. Now, that's going to be tied in with the entry, right? We're going to be entering a stock that is crossing above or below. And then for the exit, it's very simple. We're going to wait for our bars to start to die down. We're going to see that all of a sudden we're forming smaller bars, and then we get the cross. So you can see how typically you could be a little bit earlier to exit if you just look for that shift in momentum when the bars start to die down. Now, keep in mind, you can mix MACD with another strategy and use it as another indicator alongside however else you're trading, whether fundamental or technical. You could still use this as a tool in your toolbox, or you can trade with it alone. So we looked at an example on the 1 minute. Now let's look at an example on the 5-minute time frame. Now I've pulled up C or Citigroup, and what we can see here is during pre-market we started to consolidate. So the MACD converged, it came flat, we just started trading in a line. Now right before the open, look at that, you can see here at about 9:20, so 10 minutes before the open, we got the cross. Okay, and we got that cross to the downside, and at about 9:25 we saw our first bar of red. So the market opens, we enter shorts, obviously betting on C to go down, and we are able to actually capitalize on the entirety of that move down to that low at 95.83, which was actually low of day, because we could see our moving averages actually did not converge until that low. And just about 5 minutes after, we saw our first green. So, you know, we start seeing volume die out, volume die out, volume die out. Started trading in a bit of a range here, not making that steep downwards momentum as we were the first 15 minutes off of open. But it's notable because we were actually never in the green. So we never saw a green bar. They actually didn't come together. They didn't touch. They didn't converge up until right after we actually formed low of day. And there's our exit signal. Let's lock in profit on that short. So we looked at 3 different stocks, 3 different examples on 3 different time frames covering my 3 simple rules. Now what we're going to do is look at a 1-month back test to see how this strategy has been performing. So this was over a month and just about 135 trades, which is enough trades for us to confidently look at this equity curve and say, hey, this strategy definitely is working. Now I hope you guys enjoyed this video. I will put a link in the description below to my mentorship. I hope to see you over there. Subscribe for more, and I will see you all in the next one.